Mervyn King, it's September the 15th. Lehman Brothers has filed for bankruptcy, Chapter 11. We're in a situation where we don't know what's going to happen next. When did it become apparent to you the scale of the crisis that you were potentially dealing with?
I think a long time before that, and it gradually built up. So there was no one moment when you can say it switched from being something that was clearly manageable to something that was unmanageable. But I think right through 2008, it was clear that confidence in the banking system was waxing and waning, and only a serious recapitalization of the banking system, both in the United Kingdom and the United States, would resolve the problem. And we spent a lot of the time then trying to persuade the government to do this and to move ahead with it. Britain was the first country to do it. But I think that, in the spring of 2008, Bear Stearns failed. After that, 1 month things looked to be improving a bit. The next month it got worse. I think it was pretty clear in the summer of 2008 that we hadn't solved the fundamental problem, that something deeper would have to be done. And absent that, then we would see the failure of another institution. And I think Lehman Brothers was top of most people's list as to which institution would get into serious trouble. But I think it's worth adding to that afterwards Ben Bernanke made it quite clear that in his judgment, if the Fed had not taken the dramatic action which it took, then every major financial institution in the United States could have failed. And that's a pretty strong statement. But I think that became clearer as we moved towards the autumn. But I don't think the idea that somehow on Sunday, the 14th of September, we were happy with what was going on, and then on the 15th we suddenly got bad news. That wasn't right. We knew the whole system was in trouble. People knew the banking system was in deep trouble. In the week before Lehman Brothers failed, there was a concern about Lehman Brothers. It was building up. And I think the conversations that took place over the weekend were trying to find a solution to the Lehman's problem, not suddenly discovering that Lehman's was in deep trouble.
So Lehman Brothers wasn't a watershed moment, but was letting Lehman Brothers go a mistake?
Well, I don't think people consciously really let it go in that sense. I think people in the United States worked very hard to find a solution to it. They took the view that they weren't going to put public money into Lehman Brothers, and they looked for other options. They concluded that they couldn't lend to Lehman Brothers because there wasn't enough collateral. They concluded that a deal would be lovely. They couldn't find an American bank to buy Lehman Brothers. They were hoping that Barclays might buy it. Barclays are a very lucky bank because they bought it essentially for half the price only a few days later. But the hang-up on the Barclays deal was that people in the US wanted the British government to underwrite any potential losses from Lehman Brothers. And since we knew at the time that we were basically underwriting Barclays, we were issuing an insurance policy to Barclays by protecting the British banking system. That was the right thing to do. But you don't suddenly write out another insurance policy which might double the losses that we could make. So I don't think there was any conceivable way that the British government could underwrite Lehman Brothers. That was the responsibility of the American government. And they worked very hard to find a solution, but they concluded in the end that they didn't have one. So Lehman Brothers went into administration.
You mentioned some of the conversations that you had sort of running up to it. Who were you talking to, and do any of those conversations kind of really stand out?
Well, looking back at my diary for that period, the whole day seems to be taken up with telephone conversations with all and sundry. So it was partly our colleagues in America, partly other central bank colleagues around the world, governors of all the major central banks, partly bankers, head of domestic banks in London. So almost everyone was involved in conversations about what might happen. Didn't actually change the situation ultimately at all. In the end, the reality came through.
You talk about the reality. A moment ago you mentioned as well sort of the fact that it was possible you could have found ourselves in a scenario where every single major US bank found itself in trouble. The scale and the depth of the crisis never quite got that far. But kind of you look back now, you sort of think about tail risks and kind of how big the tail risk was, how fat the tail was. What was the worst case scenario here? How bad could it potentially have become?
Well, it could have become extremely serious. As Ben Bernanke said, the major financial institutions in the US could have failed. That would have led to a collapse of how the payment system was organised, how we receive our wages, pay our bills, pay our mortgages. The economy would have ground to a halt. We could have gone back to a repetition of the Great Depression of the 1930s. Now, I think we would have taken action, as we did take in late 2008 and early 2009, to try to offset the consequences of that, but we wouldn't have prevented it altogether, and it would have been a much deeper recession than the one we actually experienced. So it was, in that sense, potentially an enormous tail risk. But, and I think here's the key point, we knew exactly what we would have to do to prevent that happening, which was to lend large amounts of money against collateral, against security provided by the banks to keep them afloat. So it wasn't that we were facing a tail risk which was a calamity, but we didn't know what to do about it.
Yep.
We did know what to do about it, and we did it. And in many ways, it was a rather straightforward thing to do, because once you saw, in our case, Royal Bank of Scotland and HBOS unable to get to the end of the day, our decision to lend money to it against a lot of the assets which they had was the right thing to do to prevent the British economy grinding to a halt. The money was repaid 2 or 3 months later with interest, and we got all the money back. But that action did help to prevent what would otherwise have been an immediate collapse. But the key policy difference, the thing that really brought the banking collapse to an end, was not just initially lending money to stave off an imminent disaster. It was actually trying to deal with the underlying weakness of the banking system, which is that they had not issued enough equity capital to give confidence to the market, that the market to lend to them. It was all very well for the central bank to lend to banks. What we had to do was to take steps to ensure that everyone else had confidence in the banking system. And that meant what became known as the recapitalization of the banking system, in which either private money or public money was put into the banks to ensure that they could absorb losses without imposing a risk to the various people who had lent to the banks themselves.
You talk about the sort of the straightforward nature of that process once it became apparent. Like, here's the plan. This is what we're going to do. One of the things that you spoke about at the time, and I'm curious to know what your thoughts are, kind of with hindsight. So you spoke a lot about sort of moral hazard and the creation of moral hazard through that process. Do you, with hindsight, think that you wouldn't have said that? Do you think that wouldn't have been a focus? Again, you sort of bring up Ben Bernanke, and he talks about this. He said, basically, his kind of, to paraphrase him, just got to get on with it at this point.
Well, once Lehman Brothers has failed, you have to get on with it. But the point is that when you take any intervention, any public policy intervention, you must ask yourself the question, how will the market respond to it? What will the banks do if we lend them this money? And you've got to have some feeling for what their response is. So the trouble is, the words moral hazard have a technical meaning in economics, which is, if the government does anything or the Bank of England does anything, how will people react to it? And if you don't think about that in advance, you'll make mistakes in the intervention that you design. So I certainly wouldn't do anything differently, and I think that we did think through the consequences of what we would do, and we followed the traditional precepts of ensuring that banks didn't get money without paying an interest rate on it, and that we took security against the loans that we made. We didn't give them money, and we didn't lend them against no security. We took security for the loans that we made to them. That has to be the right way to do it. Otherwise, banks have an incentive to get themselves into deep trouble, knowing that they will be rescued in the end. So the big lesson to me from all this is that although banks today are safer than they were then, they're not safe. And what we need to do is to put in place a system in which banks have to provide the security to the central bank in advance of a crisis, so that everyone knows that the banks have got enough assets to provide as security or collateral on the loans that the central bank may have to make to them to deal with a run on their deposits, or in the case of 2008, a wholesale bank run on the financial system.
But you say that they're safer, but they're not safe. Oh, so work is still to be done. Is that what you're saying?
Yes, I think work still has to be done to ensure that the arrangements. See, I think that the American view is when you're in a crisis, you have to do what you have to do, right? That's fine, but that's not enough. You have to make sure that when the crisis starts, you've done the preparatory work beforehand to limit the amount of lending that you have to make and to ensure that when you do make the loans, you know that the collateral you're lending against is adequate to enable you to avoid risks to the taxpayer.
Do you think the irony of all of this, and many people at the time said it was an Anglo-Saxon crisis, the irony of this is that the American banking system has come out stronger and the European banking system arguably has never recovered and has come out weaker. To your point about the American, sort of, you just got to do whatever it takes, hasn't doing whatever it takes proved to be kind of just the right thing to do?
Well, once the crisis has started, yes, and that's what we did.
Yep.
All countries did that. My point is that you don't know in advance when a crisis will come. You don't know what form it will take. What you do know is that once it started, the central bank will have to lend a lot of money to
Yep.
banks. It is vital to sort out the conditions under which those loans will be made in advance, to make sure that banks do have enough adequate collateral or security to justify those loans being made to them, and that it's big enough to enable the central bank to lend enough money to prevent a bank run and a collapse of the system. So, yes, in the event you will have to lend, but you should put in place a mechanism for that lending so everyone's clear in advance. And the reason why that is so important now is that Congress in the United States has passed laws which prevent the Federal Reserve from doing what it did in 2008. And that's a terrible mistake, because come the next crisis, I predict that the Federal Reserve will be on its knees begging members of Congress to rescind some aspects of that legislation to enable it to make loans to protect the United States economy from a disaster. Well, much better it would be if we explain to politicians and to people at large the reason why we are willing to lend large amounts of money to banks in a crisis is to protect them, not to protect the banks, but to protect the economy, make sure the economy can keep working. But it's not a free gift to the banks. We are making sure that they have to take out an insurance policy, if you like. They have to position enough collateral such that it's safe for the central bank to lend to them. And that will limit the rate at which banks will expand before the crisis and limit the amount of money that we have to lend during a crisis. And if done properly, in my view, it will prevent many of the aspects of the crisis we saw in 2008.
One of the criticisms that is kind of possible to level back at the way that the UK structured itself at that period was the sort of the tripartite arrangement and the differing nodes of responsibility that existed within various institutions. A lot of power has now been centralised within the bank itself. Is that necessarily a good thing? Was that the right course of action? There are those colleagues of yours, Paul Tucker is one that springs to mind, who are concerned that we are not in that that we are in that situation.
So I remember back in 2009-10 when the then opposition, David Cameron and George Osborne, came to me and said, look, we would like to move banking supervision back into the Bank of England. And I was reluctant because I said, look, we moved it out. You're asking us to take on a lot of additional responsibility. This may detract from our attention given to monetary policy. Why is it you really want to do this? And they had two arguments that seemed quite difficult to resist. One is that at that stage, the only institution that was trusted was the Bank of England, and it was vitally important that regulation of banks be given to an institution that people trusted. And the second was that to create a new body, independent of the Bank of England, would mean to sort of increase the segmentation of the regulatory system that we had at that stage. I understand why the FSA was set up in 1997, because at that point, if you remember, the banking crises that had led to concern about banking regulation being in the Bank of England were because of scandals like BCCI, which was about a bank that was fraudulent, and about Barings, which was a rogue trader. In other words, it was about effectively criminal behaviour. The central bank isn't the right place to have people looking for criminal behaviour. Of course, the unfortunate thing was that 10 years later on, the problem with the banking system was not criminal behaviour. The problem with it was that it had simply overextended itself. It had increased its own leverage to levels that made the banking system very vulnerable. And the argument that prudential regulation should go back to the Bank of England was a very strong one, and that's where it is. But it's a question I'm sure that people will revert to in the future when they see the enormous workload on the Bank of England. It's now responsible for a lot of different things.
Taking a step back and sort of bringing ourselves more into the present now, the rise of populism that we are now seeing around the world, it's in the United States, it's happening here in Europe, it's happening sort of, the headlines seem to be constantly dominated by it. Can I draw a line between, maybe not the collapse of Lehman, but that whole period and what we are now experiencing? Sort of, can I draw a line between Lehman Brothers and populism? Can I draw a line between Lehman Brothers and Brexit?
So I think one should be careful in using the phrase populism. It's like the word austerity. People devise these words to represent something they don't like without being clear about the meaning of it. So populism has many illustrations, if you like. In Southern Europe, it's a perfectly rational rejection of excessive fiscal consolidation to cope with a badly designed monetary union. I understand why people think that. In the United States, populism is about the reaction by those people whose wages have been held down through a combination of technological developments and globalization. They feel left behind. They haven't benefited in the way that people in New York and other metropolitan centers have from the benefits of the globalization of the last 30 years. They feel left out, ignored, and their real wages have been depressed. So that's a different motive for it. And I think in the case of Brexit, it was a very clear referendum on a very specific issue, which was should the UK remain a member of the European Union. It wasn't about wages or anything else. And I think people should respect that. The idea that the British population was hoodwinked in a referendum because they really were concerned about wages or something else, as opposed to membership of the European Union, I think is a rather arrogant view.
It wasn't. There is an argument that says that it was the rest of the country lashing out at London, lashing out at the financial community as a result of the hardship that was experienced post the financial crisis.
Well, I think there are many lines that you could draw leading towards so-called populism. I think the financial crisis was certainly one of them, and I think the reason for that is that in the 30 years before that, a lot of ordinary people, or a lot of small businesses, had accepted that the discipline of the market, even though it's unpleasant when you discover that your firm is not winning orders and so jobs go and the firm goes out of business, is nevertheless the right way forward to a thriving market economy which can generate productivity growth and higher real wages. So they bought into that. Come the financial crisis, well, having refused to bail out weak firms in the 30 years beforehand, it looked as if the government was bailing out banks. Now, there was a very good reason for that, which is if the banks had failed, the whole economy would have ground to a halt. And we tried to explain that. I was very clear. I would say in Parliament that we're not doing this to protect the banks. We're trying to do this to save the economy from the banks. And that was the key message. But I understand why it wasn't one that was easy to absorb and it was painful, because we had not been able to say to people beforehand, look, essentially we've put in place an insurance policy for banks. If there ever comes a moment when they would need to borrow from the Bank of England, they will be able to borrow. But they pay the price for that insurance policy in every year beforehand when there isn't a crisis. I think that can be explained to people and they will understand and accept it. But that wasn't done, and I think that's the big lesson for the future, is that we need to do that.
Is Brexit a good thing for Britain, do you think?
Well, people have different views on it. I myself don't think it's going to make a dramatic difference. I think you can argue that being a sovereign nation, having control over our own borders, is a big plus. You can also argue that if you want to genuinely be part of a European Union where we accept a high degree of political unity with other countries, it's a bad thing. People can take different views on it. It isn't an argument where it's obvious what is right or wrong. But I think what was so depressing, what is still depressing about the debate, is why both sides of this argument are absolutely convinced that they know the consequences very clearly. One side thinks they'll be disastrous, the other side thinks that we'll be a land of milk and honey.
Yep.
Neither side is right on that. And what we needed to do back in 2016 was to say, look, we had a referendum campaign, we got a result. Both sides in the campaign said very clearly, there's no doubt about this, that leaving means leaving the single market and leaving the customs union. Prime Minister Theresa May reiterated that on more than one occasion. Here we are, 2 years later, more than 2 years later now, and we still don't know what the arrangements are going to be for single market, customs union, etc., etc. None of this was necessary if proper planning had been put in place right back in 2016. So our political system has made a mess of it. It's not the decision to leave or stay in the EU that's made a big difference. It's the political consequences of that discussion and vote that have caused the problems, not the underlying economics of it.
Just one final quick question on Brexit. There are some that say that Brexit is kind of comparable for the City of London to Lehman Brothers. Is that are they in any way comparable?
No, they're not comparable at all.
Will the effects be comparable?
The Lehman Brothers was something that we knew the banking system was undercapitalised, but the final few days of Lehman Brothers were dramatic and could have led to a collapse of the entire US financial system. Brexit is not remotely comparable with that. The other side of the coin is that solving the problem of the banking failures in the US and the UK at that time was relatively straightforward, and by the time we got to spring of 2019, the banking crisis as such was over. Resolving the issues surrounding Brexit will take much, much longer. So it's a much more drawn-out process of solving a whole sequence of practical problems. But the long-run consequences, 30 or 40 years down the road, we don't know what they'll be, is the only honest answer. We just don't know. But I find it hard to see why they should be really significant in comparison with a collapse of the financial system and the economy grinding to a halt, a repeat of the 1930s Great Depression, or indeed the sort of changes we've seen in our own economy in the last 40 or 50 years. Just don't think it's going to be quite such a big event. What it is a very dramatic political event. It's our political system that's collapsed, not our economy.
Is the City of London, just to kind of draw a line between the two in a slightly different way, dealing with the crisis of Lehman Brothers, as you've said, was in many ways quite a sort of straightforward process. Getting the rules and regulations sort of after that, and to some of your points that you've made, right, was a much more difficult challenge to achieve. Do you think, where are we now in terms of your view, in terms of the safety of the financial system? Have we put the right rules in place? Are there things that we still need to do?
So I think, as I said before, the banking system is safer than it was then, but it's not safe. There are still things that we ought to be doing, in my judgment, in order to make a run on the banking system much less likely. And I think it's debatable whether banks have issued enough capital.
So what's the biggest risk now? Where kind of, as you look at the financial landscape?
So I think the big lesson from what happened was that people could see that what was happening in the world economy was unsustainable, but you couldn't forecast exactly where the problems would blow up. And I don't think it makes sense to say, where will the next crisis be? The right question to ask is, when the next crisis occurs and we face a problem, what are we going to want to do? Answer is, we'll need to lend money to the banking system to keep it afloat. Have we put in place a system of regulation which ensures that the banking system is sufficiently resilient? And I'm not sure that we've done enough to make it sufficiently resilient. It's a question of judgment, but I would like to see much more done in terms of making banks pre-position collateral so that they are in a position to borrow from the central bank, a sort of insurance policy for the banking system, which is politically acceptable. The key thing is to explain this to people in advance so that when the government takes action to lend money to commercial banks, people understand, yes, this is simply the playing out. The accidents happened. This is the insurance policy to which they're entitled because they paid for it in the past. That's the key thing I think we need to do.
Mervyn King, thank you very much indeed.